Hello, welcome to our third and final session in Market RX. Your revenue isn't lying, but it isn't telling the truth. Today's topic, funded or forgotten. We're speaking with John White about what life sciences startups can do to position themselves to and for investors. John is a managing director at KCK MedTech, an evergreen fund that is focused on venture investing in clinical and commercial stage medical technology companies. As an executive and investor, he brings together deep operating experience and a strong financial lens. He and the KCK team are focused on long term investments and companies that are revolutionizing clinical care. John brings a deep understanding of how life science leaders can turn insight into investment. This conversation is going to unpack what high conviction investors, especially those with deep life sciences and operating expertise, really want to see from CEOs in a capital constrained, strategy starved market. It's all about durable potential and not just short term traction. So, with that, I'm going to hand it over to your real host, Holley Miller, founder of Gray Matter Marketing. And off to you, Holley. Thank you so much.
Thank you, Rita. Hi, everyone. I'm Holley Miller, as Rita said. Thanks for joining today, and hopefully you were able to join some of the other insightful conversations we've had this week. I founded Gray Matter almost 20 years ago now after seeing too many breakthrough products struggle to find market traction because most CEOs and commercial leaders fall into the same trap. They think product superiority plus sales readiness equals launch success. That's what I call the product adoption lie. Instead, we offer our partners the blueprint to make their product the only choice the market is wired to want. It's called healthcare category design, and it's the strategy behind companies that set the new bar for care and create outsized financial results. So I'm so glad to have John White with me today. John, your lens as an operator and investor in the medtech space offers a valuable perspective to our audience. You've led several successful exits. You co-invented the technology that propelled iRhythm. Sorry, I can't talk today. Sorry, you co-invented the technology that propelled iRhythm's Zio patch. And that was developed during your time in the Stanford's Biodesign Innovation Program, which I know you've continued to be a pivotal leader in. I'm sure I speak on behalf of everyone when I say I'm really looking forward to this conversation. So let's dive in, shall we?
Great to be here, Holley.
Thanks. As someone who's evaluated dozens of early stage companies for potential investment, what surprises you the most about the pre-commercial mindset?
Yeah, well, first, before I answer, I do want to say thank you to Holley and her team for bringing me in to discuss this important topic. It is a real pleasure to be here, and I always enjoy working with the Gray Matter team. But to your question, Holley, so I see a lot of early teams that are really not focusing enough on the customer. A lot of the teams that I see pay a lot of attention to the technical and clinical strategy that they're chasing, and I don't see that deep engagement with the customer. For me, when I'm looking at a company and I get the sense that they don't understand the entire customer situation, I get nervous that they won't either build the right product or service or won't support that product or service with the right data or sales strategies. And so, those are the sorts of things that give me pause when I'm looking at companies, especially in the pre-commercial zone. At the end of the day, what I would say is it's your responsibility as a founder or leader to prepare the market so that your innovation can be successful.
As you've mentioned and alluded to, bringing a new product to market is a high stakes game, right? I think I read recently where it takes, $94 million to bring a PMA medical device to market, and that can take easily a decade, right? But in spite of that, investment in time, 66% of product launches fail to meet first year projections, and data shows they don't ever catch up. There's no such thing as a slow start. Another 42% of startups fail because they didn't solve a valid customer problem, to your point. How deeply do you know your customers? So that means that companies are burning through capital and are getting the founders and early investors diluted as they chase further investment to keep themselves afloat and try to manufacture adoption, which, as you know, is not really a thing. So what's the one thing you wish every pre-commercial leader and or CEO truly understood about going to market or raising capital?
Yeah, I think there are so many amazing people in this industry that are so accomplished. They can do amazing things, but my message is always, and this has probably been hammered into me because of my experience at Stanford Biodesign, but just because you can build it doesn't mean that your customers are going to come. When you are a founder or you're deep in it and you're building your product, just because you understand a clinical need doesn't mean that everybody else does. I'll give you an example. So when we invented the technology behind iRhythm, we realized that what was important to cardiologists to diagnose the cardiac arrhythmia was longer duration monitoring, 7 days versus what they were doing at that time, which was 24 hours. Like, that's super obvious to us right now, but guess what? That was not obvious to cardiologists in 2025. And when we would discuss our invention with cardiologists, they'd look at us and say, well, why would I need this? Like, this thing I have over here, this Holter monitor that I have over here is working very, very well. And what we realized is that it was as much about communicating the category that we were trying to build as it was showing them the technology or showing them the clinical data. We had to change the cardiologist's perception of what good clinical care looked like. And, I can speak for hours on this, but what iRhythm figured out is that they needed to align their entire clinical and commercial strategy around building a category called extended wear or longer duration cardiac monitoring. And, when you get that right, you can see what happens because you've seen the success of that business.
I love that example because I think, again, it seems obvious now, right? But back in the time,
it was not.
Like, human beings have the natural lens of this is how it's done, right? And I think you make a great point that so often companies are focusing really on two primary dimensions, the regulatory pathway and the manufacturing process. But they miss that market shaping that has to occur before launch. They have to really rewire, is the word I like to use, rewire the market, the assumptions, the priorities, the decision criteria to get adoption. Otherwise, you're going to get resistance because they already have a good widget. They're already doing a good job. Yeah. So I think CEOs need to start thinking about priming that market to care, to your point, about the product, because you can teach them about the problem that you're solving and why it actually will have meaningful, measurable benefit to them and their patients.
And let me just say one other thing as an investor. I want to get to the outcome as quickly as possible and as efficiently as possible. Otherwise, you bring up, cash burn and dilution. I mean, these are all things that we have to consider here. So what the most efficient way to do this is to design the product and clinical trials and services correctly from the beginning. So understand how you want to position your product in the market and understand the category you're trying to go off and build from the beginning, and that will be best for me, and it's going to be best for you as the innovator as well.
Yeah, it's 10x harder to do once you're in market and once your regulatory pathway is locked in. It's just very hard to make meaningful changes that are quick, to your point, or efficient.
Yep.
What's one of the easiest things that folks pursuing investment for their innovation can do to secure funding?
Yeah. So first of all, it's, as I said already, I'm going to sound like a broken record, but you really have to know your customers, and You have to know that you're solving meaningful problems. So part of your responsibility when you're out raising funding is to educate me on how you're different from the competition and how you will transform a market. Because I'm looking for big opportunities that are going to make big differences in healthcare. And so, I look at all sorts of different stages of medical devices, but I often see early commercial companies, companies with a handful of customers, $1 million to $2 million in revenue. And I buzz right past the top line revenue number. I am not, frankly, very interested in what your top line revenue number is at this stage. What I am interested in is the quality of your revenue. So I'm looking for utilization and repeated utilization. And what I do is I go find those doctors that are using the product over and over, and I ask them why they're using it. And if it doesn't really match what you've told me, that's not a good thing, because that means you don't understand your customer. And so that's a red flag for me as I look at deals. Yeah, I'll give you another example here, Holley. So we at KCK, we're investors in a company called Sonnex Health. Sonnex Health is completely changing the carpal tunnel procedure. All of us scroll on our phones too much. Many of us have carpal tunnel, but not very many of us want to go get a surgical procedure to fix it. And what the Sonnex team really understood is they understood that patients these days do not want to go in for that procedure. They want to get back and ready to work as soon as they can. And they've developed technology that allows you to do the carpal tunnel release in the office. And it's not about how their device is designed. It's not about how they manufacture their device. I mean, those are important, but what's important is that they understand when they're communicating to potential customers that what they're bringing them is a solution that will get their patients better faster and return to work faster, and lets the surgeon stay in their office and be more efficient. And when the patients are happy, it drives word of mouth, and now they have more patients in their office. So you're not really talking about cutting the carpal ligament. You're talking about building their practice. And that's what is critical to these doctors. And so, their marketing, their approach to the discussion of the market is centered around these value propositions that they bring to their customers. And so that's an example of what is the true need that the company is solving, and how we take a look at it from the KCK side.
On that note, you make a great point, which is, are you solving something that's going to fix a paper cut, or is it, is the patient bleeding out and you can solve that? So that kind of acuity level of the problem, how big is it? How painful is it? How costly is it? And if you could solve that, to your point, you're creating almost a transformative future. You're giving them the picture of this is how your world could be, and inviting them to come along with you, whether you're the investor or the KOL or the patient, you're inviting them to come with you on this journey to create a new standard of care that, to your point, someone finally kind of questioned the idea of why do you have to have surgery to fix this? Or why can't you do this in a day or an hour versus being laid up and immobile? So I think this idea of having the vision, but being able to communicate it and explain so in a way that it becomes just so intuitive, right? Oh yeah, of course that makes sense. Of course that makes sense. That's what we want to do, right?
Exactly.
And I think sometimes companies, to your point, are so focused on the technology, how we do it versus what we unlock or what outcomes we can generate with that.
Yeah, I would say as well, especially in early commercialization, the tendency is to try to go out and collect as many customers as you can. Again, that is not something I'm as interested in. I'd rather you have 10 customers that are doing, repeat procedures or prescribing your technology more regularly than 100 customers that are prescribing it intermittently. And look, I was a sales rep. That was one of my early experiences in medical devices. And I will say, focus is hard. Like, you have to fight yourself from going and knocking on the next door versus going back and working on the customer that you have already and figuring out how you can bring technology or service to that customer to make them even more successful.
Our first session on Tuesday, I guess, which was really about what we call the revenue mirage, which was you can kind of manufacture, revenue at least in a quarter.
Oh, yeah.
And to your point, if you're thinking about building not just sustained growth, reliable revenue, but that hopefully translates to greater valuation. But to your point, having a customer base that truly believes and is loyal and is using your technology repeatedly versus just, let's get a bunch of new doctors to try those things so we can, hit our quarter. And I'm curious, from your investor, for some of your more commercial stage companies, can you sniff that out? Or is that just a lens you have to kind of peel back and understand the reality of what's happening and, what's the market traction? And then second part is, does it make you nervous? How do you course correct that for an investment portfolio company?
Yeah. So there's two things. I think, yes, we sniff it out. We think about it quantitatively and qualitatively. And I've kind of talked qualitatively, like I'm going to talk to your customers and I'm going to understand why they're using the product and or why not. And so if it's not lining up with what you're saying, I'm gonna figure that out. I think what can course correct is getting a better understanding of what can drive value, fundamental value. And for me, that is some of these examples that we've described. How can you transform an entire specialty or an entire therapy area with your product? And how can you educate the market on not just what your product is, but what the transformation is that you're going after? And you can do that. You can pivot, you can shift, you can change your communication strategy along the way. One other example, and this one Holley knows extremely well. She and I worked together on one of the KCK portfolio companies that is launching a brand new spinal bone graft. And what we understood is that company or surgeons are not looking for bone grafts that fuse bone at the highest rates. I mean, they want that, but they want a lot more than just that. And so what became clear to us is that they wanted not just high fusion rates, but rapid, fast fusion. So delivering a product that sped up fusion would make a meaningful difference for them, and it would be extremely differentiated in the market. Now, sometimes it's better to be lucky than good. We did not necessarily design our study to prove that, but we were able to show it with the data that we had. And so that allowed us to pivot the company towards a more compelling vision for their surgeon customers. And as a result, we launched the bone growth accelerator category, and the product is now out on the market and doing very well and gets really great responses because we're delivering some value to the customer. And so just because you've gone down one path doesn't mean you can't reframe the situation, but you need to be able to communicate what it is that you're solving.
I think that's a great point, and I want to lean into it for a second. It sounds like in many ways, the onus is on the company to teach the market, right? The value. And to your point, maybe you expected it to be A, but when you went into kind of the early planning for commercialization, had your, KOLs, were getting the readouts from your regulatory, results, clinical results. You have the opportunity at that moment before you launch, before you're burning your money, right? Burning all your cash, to take the opportunity to find that beachhead, for lack of a better term. Where can we deliver unique value that someone cares about? Not everyone. Maybe to your point, if I'm primarily focusing on, young younger patient population, that they're probably going to fuse pretty well. But as you look at doctors who are maybe dealing with older patients, smokers, patients who've had cancer, obesity, diabetes, they might care a lot more about having that extra security blanket that I'm going to get fusion, I'm going to get it faster. And that matters because the longer it takes to fuse, the more likely it is the hardware will fail. And that doesn't serve anybody. So I would just love maybe you to tell a little bit more in your mind about how can you think about that lens of framing something in a way that matters.
Yeah. It's not just about comparing your product against the competition. Like that, feature benefit comparisons, at the end of the day, that means you're living in their world. You're living in the box that they've created. So if you can go out and define an entirely new category, a new basis for competition that you can own and dominate, I mean, that's the key to building hugely successful companies. I look at, I go back to iRhythm. If we put the iRhythm technology up against the best 24-hour Holter monitor, you know what? Our signal was not as clean as theirs. But it turned out that wasn't the problem to solve. The problem was, hey, let's record the heartbeats for 7 straight days, and then I'm pretty sure we're going to find the problem versus sticking something on somebody for 24 hours. And so all of the time and effort and energy and money that those companies spent to make their 24-hour Holter monitors have the best signal and the least noise and all of this stuff is irrelevant because they're not even competing in the right ballpark. So think about how much more successful you can be commercially if you think that way versus sort of bowing down and competing on whatever the current market standard is.
We always say, but it's better to be different than better, right? So I think you're of the same mindset. It sounds like.
Well, I've just seen that mindset leads to extraordinary value, and as an investor, that's what I'm looking for. I'm looking for companies that can dominate an entire category, and whether it's we've talked about iRhythm, but you look at Shockwave, you look at all Inspire, you look at these companies, and they're able to redesign the market in a way that works for them. And that's like a very intentional process. It's not going to just happen. Like you have to figure out how you're going to clearly communicate this and be sort of very deliberate on your clinical evidence strategy, on your sales and marketing approach, on even some of your product features to make sure that you can live into the promise that customers really care about.
I love that. And so let's just say I'm a founder and I have promising technology and I've got, early KOL interest. From an investor perspective, what's still missing that would allow you to lean in?
Yeah. I mean, for me, you got to have what you've just described, Holley, is sort of like table stakes. Like you've got to have KOLs that are interested in your science. Like it turns out your product actually has to do something. But what I'm going to spend most of my time on is market validation. And like I said, I'm going to be calling customers to understand their needs. I'm actually not, half the time I'm out there talking to your potential customers, I'm not validating your product. I'm asking about the problem you say you're solving. So I'm trying to validate the problem as much as the solution. And when I hear customers that are aligned to the problem you're solving and they think that your solution is the right one, that's when I get excited from an investor. That's what caused me to lean in as an investor.
On that note, it seems like there is a possibility for creating truly something net new, like the iRhythm example you gave. Maybe the end user can't even imagine that. They just accept that's the way it is. So is there ever like a false signal that maybe there is a new category that would be hugely valuable, but the market can't even, get their head wrapped around it?
Yes, that certainly can happen. However, I've done this a lot now, and so I'm used to sort of teasing apart what I believe are false signals and real signals. Part of that is Stanford biodesign. This is something you basically get hammered into your head when you're a biodesign fellow, like I was, 15, 20 years ago. But that sort of thinking never leaves. And it's, look, if you know as a founder that I'm going to run into this, I'll say false category, if we're using that language, tell me about it first, so that when I go out there, I know what I'm going to hear. So it's really about the need as much as it is the product and the actual features and benefits that the product delivers.
I love that lens. And I think you're saying, like, once you kind of see it, you can't unsee it. And so the best investor, the investors you want on your side, aren't just betting on your product. They're really betting on your ability to create a new market. And when I think about venture capital at its highest form, it isn't about optimizing margins or eking out efficiency gains in a crowded space. It is really about building something, net new.
Yep.
And the right investor isn't trying to capture a slice of that existing value. They're really helping you create that value that didn't exist before. And I know that if I were a founder or a CEO, that's the kind of investor partner that I would want in my corner.
Yeah. And, that's one of the things we do at KCK. So, we are all operators by training. We've all either been a part of or founded early stage startups. We've had successes, we've had failures. We've also all been on the other end. We've all worked at large Fortune 500 companies. And it's, we like to help. We like to work with you as a founder to make your product more successful. And so it's that experience that we think makes us able to bring extraordinary value for our portfolio and for our investors, for our entrepreneurs.
Well, we've certainly been a witness to that. As we wrap up to allow a little bit of time for Q&A, what's one question every founder should ask before hitting send on the pitch deck?
Yeah. Well, you should ask lots of questions of yourself before you hit send. But at the end of the day, if you disappeared tomorrow, what problem would remain unsolved? And most importantly, would anyone actually notice?
And I'm not sure if they want that answer, right? They may not like what comes back at them. So that's a great lens to use. I love that. It's great advice. Great advice.
Yeah.
All right. Well, I guess we are ready to transition over to our Q&A session. That was such an invigorating conversation. Thank you so much, John, for joining us for that. As always, from the last couple of Market RX lives that we've done, we like to end this main segment with a reflection question. So, a question for you is if your product is a game changer and you're not taking a category first approach, are you just adding another column to some competitive matrix for a value analysis committee, or are you creating a breakthrough product? Because breakthrough products don't win by just fitting in. They win by teaching the market to want something different. So I guess my takeaway from what I've learned from this from this conversation is, to find the urgent problem that only you can solve for a specific audience. You build from there, and that's how you drive adoption, change, care, all of the amazing things that you're hoping for when it comes to your business. So let's go ahead and segue to Q&A. But before we do that, if you are watching the replay and you have questions, go ahead, leave your comments below. Feel free to continue the conversation and reach out to the Gray Matter marketing team directly. So let's go ahead and roll.